So today we're going to do an update into GAN. This has been highly requested in the comment section. So for you guys that wanted to see this video, hopefully it's useful for you and we'll get stuck into what's going on with this stock. So GAN has had a terrible year. It's down 86% and it was actually doing okay until about November 2021, but when the whole market came down, this came down and it came down massive as well. It's now a 57 million market cap, and I'm guessing the reason why this is getting punished a lot more than other stocks, because when we actually dig into the financial performance, it actually hasn't been performing that bad. The reason why it's probably getting dragged down is because it's a small market cap, and we've seen so many small market caps get massively dragged down here, and also because it's an unprofitable market cap as well, a small cap, that's probably even more adding on to the pressure here. But without doubt, the reason why a lot of people are asking me to talk about this is because it's down so much. You know, fear is the biggest emotion in the stock market. You know, I don't really get comments to talk about InMode or Air Africa because they're up. You know, people aren't bothered when stocks are going up. It's when that fear comes of like, oh, it's going down, what do I do now? And I can see that pressure is kind of building there. Now, I've been a bit reluctant to talk about GAN because I've already talked about it on the Patreon here on November the 20th. And I just think like, if I've already talked about it on the Patreon, I don't want to double, talk about it on the YouTube because it's pointless for the Patreon members. So yeah, that's the great benefit about Patreon, is that we cover, 2 exclusive videos a week on there. Them videos are normally voted for on what we talk about. GAN being on a week that report earnings, and we talked about it. So I wouldn't normally do this video because I've already covered it, and I think that's the really good thing about the Patreon, but I will do it because it has been quite highly requested. So GAN at the moment has had a horrible year. It's now 57 million in the market cap, and the valuation now is just unbelievably low on this. It's lower than where it IPO'd, and the financials have improved massively on it. You look at the total enterprise value to revenues, it's a 0.24, a price to sales ratio of 0.3, total enterprise value to EBITDA of a 2. I mean, unbelievable levels that this is at now. It's, you can talk in ways towards levels that you would say of bankruptcy, and we'll see if that deserves it a little bit later on in the video. So they have 2 incomes basically, gang. They have B2C, which is like a direct to consumer. They acquired this in 2021 through Coolbet. So this is just like your DraftKings, your William Hill kind of platform, and this has been doing very well for the company, especially since they've acquired it. And then there's the which is mostly focused in Latin America, where there's a lot of growth. They're also in Northern America, Northern Europe, which is still growing at good rates. That's quite a big, more mature market, as you guys probably know. So yeah, that still has good amounts of growth. The other part of the platform is the B2B. So the B2B is where the best way to explain it is basically if a casino in the US wants to get online and do online gambling, they need someone to help them do that. GAN's a bit like a Shopify. You want to set a shop up online, you got to Shopify this, to set you a shop up. It's basically like that for casinos. They want to get online. GAN is a Shopify. They set you up, set your website up, and as you know, the TAM opportunity right now for that area is huge. You can see the TAM opportunity for the B2B iGaming. You can see the B2B for the sports platform. Massive growth area, and hopefully GAN capitalize on that. So they've got 2 incomes, so they're quite secure from that point of view if one of the incomes was ever to struggle. Now, the company did well in 2021. The main focus was to grow revenue. They grew revenue absolutely massive. Moving into 2022, the plan was to carry on increasing revenue at good rates and start moving to the profitability side of it. And they started to do that. Unfortunately, in the last 2 quarters, I personally have been a little bit disappointed with the last 2 quarters. They haven't been as good as what I want them to be, but they're nowhere near terrible. And when you look at the stock price, you would think these quarters are absolutely on the floor, and that's totally not the case. When we dig into the financials here, you'll see here that the B2B revenue increased 14%. That's fantastic amounts of growth, especially when you look at a stock at this sort of valuation. You'd think this is a stock that's struggling to grow revenue. That's really good growth here from that platform. Now, unfortunately, the growth was slowed down because the B2C revenue you see here did decline 8%. So why is this declining? When you look into it, active accounts was actually doing quite well. The big thing that affected them was the current exchange rate. How many times have we heard this in companies' earnings? Now, what do we know about the B2C platform? A lot of the B2C platform, as you know, as we just talked about there, is in the likes of Latin America, Northern Europe, and what do we have at the moment? We have a strong dollar. So every time that GAN are converting this into the dollars, because the dollar is so strong, obviously the revenue is not performing as well and losing a lot of FX to that impacts that's going on in the world right now. So actually it looks like it's quite weak, the B2C platform, but actually when you look here, the revenue actually grew 11% on a currency exchange basis. So actually that's actually pretty good. And then when you look at the actual B2B, that was actually up 16% and 8% for the B2C. Now 8% is a little lower than what this is where the company has been a little bit underperforming what I personally would want. I would want that B2C to be in the teen range, so that's where they're underperforming a little bit for me. But when you look at this here, where you take the currency impact out here, there's good growth. So you know, when the currency, the strong dollar goes away, which it is starting to do actually right now at the moment, when this starts to go away, you've actually got a business here putting in, you know, good amounts of growth. You know, you'd say that, you know, 11% is not anything to you know, screw your nose up at. And this is in GAN's worst quarter. You know, Q3 is the worst quarter for GAN. So this is actually pretty good here. Now the net loss was 6.9 million versus 8.7 million. So we do want to see these losses come down a little bit more and get back to profitability where the business was 2 years ago, but it is moving in the positive direction. Adjusted EBITDA was 2.1 million versus a negative 0.9 million. So adjusted EBITDA is now positive on the business, which is absolutely great. And you can see here cash was 41 million at the end of this quarter. So when you look at this business here, it's still growing in good rates. They're now EBITDA are positive. They're shrinking down the losses. They still have 41 million in cash, and you look at the market cap, it's 57 million. They've nearly got more cash on the balance sheet than what the market cap is. Still a growing company, moving to profitability. Sure, we have still a few things where the revenue growth could have been a little bit better. They could have cut the losses a little bit better, but no way is this a dead company like the share price reflects. You know, they're actually doing quite amazing. Now, one piece of news that did pop up was that the CFO did leave. So I'm sure you guys that listen to the conference calls hear the CFO quite a bit, which is Karen Flores. She has left the role of CFO. Now, obviously, what's the role of the CFO? You know, they are in charge of the financials of GAN. So when I look at GAN and the CFO leaving, a few people asked me at the time, you know, what do I think of this? I actually think this is actually positive. I actually thought the problem with GAN is they've actually delivered quite well over the years. They've had good growth, they're starting to move to profitability, but what has been the downfall of GAN in the last few years? And the few problems that I have had with GAN I actually come down to the CFO. There's been a few times where GAN tends to miss their EPSs, and I feel like this, you know, obviously the CFO's job is to manage finances, make sure you manage expectations from Wall Street and say like, this is where we're going to come in at, and you know, a good management team normally sandbags the guidance, give easy numbers to beat, and then they go beat on the EPS, beat on revenue, and that's a bit of the job of the CFO here. And when you look at GAN's history, I think when you look at the expectations for earnings, I don't think GAN have ever beat their EPS. And now you could argue that, you know, that's analysts just, you know, getting it wrong all the time. But your job as CFO is to kind of manage that, or manage a situation where, okay, we just need to be careful this quarter because this is what Wall Street thinks we're going to do, and we just need to get that EPS up a little bit. And that's the CFO's job to, you know, manage that financial situation, manage the expectations of Wall Street as well, and that's been one of the weakest parts, I think, for GAN. I think if GAN actually came in with more EPS beats, the share, as stupid as it sounds, even though it doesn't make that much difference if it's, you know, negative 0.4 to negative 0.6, negative 0.04 to negative 0.06. It doesn't make that much difference in long term, but for Wall Street that's a big deal, and I think that's all, you know, a bit of a job for the CFO to manage it. You know, sandbag them numbers a little bit and make sure you beat expectations. You know, another thing, like I remember a year ago we had the Copa America and the Euros, and it was a good quarter for GAN. They came out and announced preliminary earnings, and the stock did absolutely amazing on the preliminary earnings, and then it came to the proper earnings, and they actually missed the proper earnings because when it came to the full earnings, they were a little bit lower than what expected off them preliminary earnings. And it was like, you had the time they did that was quite close to their actual earnings report, so you know, they would have had a really good idea on the prelims, and obviously I don't know what happened, but they gave way too big numbers to Wall Street, and they didn't manage that situation. So yeah, I think from any weakness in the GAN part of the business, I would say it comes down to the CFO. So with Karen actually leaving, I think she's probably been the weakest part of this business, so I don't actually mind her leaving the business. So not much of a negative for me. So let's have a look at what this company is valued at now. Now currently they are doing a share buyback, so I have put that in. I put revenue growth of 10, 15, 20%. I would expect GAN to be more around this 15% range in the next few years. I put a profit margin of 8, 10, 12. I think they should get around to a 10% profit margin. I mean, when you look at the gross margins are very high on this business. If you look here, the gross margins are 82% on the B2B platform, which is amazing, and 62%. So I think they could easily pull out 10% profit margins from this business. That's the job of the CFO, to start, dragging in that profitability. You've got good margins to be, playing with there. So I think 10% profit margins is achievable, 15% revenue growth. I put total earnings or a multiple of 20, which I think is very fair. I think you could potentially argue it should be a little bit higher. And the upside here is currently 875% on a no share buyback and 1012% on share buybacks. So you can see here, I think these numbers are very reasonable, and the upside potential at the moment is insane for GAN. And I think that's at quite a cheap valuation as well. I think, realistically, if we said, let's go, 30, we're up to 1,300% upside, 1,500% upside. So I think there's definitely, this stock has been way sold off on the valuation on this point of view, and the stock's still doing pretty well financially. Obviously, we'd like the B2C platform be a little stronger, and we want to see them keep pushing into that profitability. But it is insanely sold off here. So I guess the last question comes down to, what are my thoughts on GAN? Well, you can see here that I have no plans of selling this. Sure, I'm a little bit disappointed with that B2C platform number in the last quarter. And obviously there's the currency headwinds at the moment, but I think they will resolve themselves and we'll go back to some decent growth. Obviously, I'd like them to keep pushing to that profitability a little bit more. But I think, look at the valuation here, and I think this is absolutely crazy at the moment. And they're still sitting on 40 million cash. That's nearly what the company's valued on a market cap basis. So yeah, that's crazy. So for me, I'm still planning to hold this. I think it will still work out for GAN. The only thing that I have is like buying shares. The only issue I have is I'm pretty fully built on GAN, and I don't want to commit too many shares to it because it's quite a heavy position, and I've always got to have the point of view, even though I think it'll work out, I've just got to make sure I never build a position crazy high, because if it does, go wrong, I don't want to lose, let's say 10% of my wealth in one position, because obviously that would not be great. So I've got to be careful about how much I allocate to it. You probably will see me nibble maybe once, twice, maybe 3 times in the next coming, I would say 6 to 12 months. I will buy, but I'm not taking up this opportunity as much as I would like, because unfortunately I already have a lot of capital allocated. Ideally, if it was a position now that was half the size of what it was, you'd probably actually see me buying here. But just because of the allocation that I do have, I've just got to weigh up the risk here, which is a little bit frustrating. But it's one of those, how you wouldn't really know this was going to come down to $1 12 months ago. So in hindsight, it looks, obviously that's what I should have done, but you didn't really realize it was going to get pushed down to 0.2 times sales, and total enterprise value to EBITDA of like a 2. It's unheard of. So yeah, still a believer in GAN at the moment, and I still think the financials are still okay. Like I said, I think they could be a little bit better than what they have been, but they're not. When you look at the share price, you'd be thinking the losses are increasing 100%, the revenue's declining, and it's not the case really. So yeah, that's my thoughts on GAN at the moment. Hope you enjoyed the updated view, guys, and I'll catch you in a bit.